Good afternoon, ladies and gentlemen, and welcome one and all to your live NFP trading event today, hosted by myself here at the UTC. Hope you are all doing very well indeed. How are we doing? Good afternoon, ladies and gentlemen, and welcome one and all to your live NFP trading event today, hosted by myself here at the UTC. Hope you are all doing very well indeed. How are we doing? Good afternoon, Scotty D. Good to see you. Hey, to Davison as well. Got you in the room. Hope you're doing well then, team. So this afternoon, of course, we do have the full rack of US employment data. We've got a lot to get through. We've got about a half an hour to do it. Before the event, we need to be readying ourselves to essentially position ourselves in the market for this afternoon as well. We will be looking to hopefully get some trades in before the end of the week. I know it's been a very turbulent time here at the moment. This week has been pretty tough going. I was just saying inside the trading room, for those of you who will catch up on this outside of the trading room and later on down the line, that we've taken just shy of 20 trades throughout the week this week, and we've had maybe 11 or 12 losers out of those trades so far. No, it was 8. I think it was 18. I think we've had 18 trades and we've lost 11 or 12 of them. So it's been a pretty turbulent time out there. We are sitting at the moment on 1.55%, which is actually, all things considered, not too bad. So we've got so far weekly return 1.55%. The trade win-loss ratio has obviously been knocked down a bit. We were up at 56.3 or something, and we're now at 55.8. But the track record is looking a bit ropey over the course of the last 15, 20 trades. It's been a bit up and down, but that's the magic of risk management, right, guys? You know, at the end of the day, we've taken the 18 or 20 trades or whatever. We've lost a shitload of them, but we're still making money, and that's what it's all about. It's about positioning in a defensive stance whilst we're going through periods like this, and with the ability to continue taking a return from our markets, which is really what it's all about. So we're going to then get going. Have a look at the econ, of course. We're going to get dug into our trading opportunities for this afternoon. So looking at this at the moment then, like I said, a really big set of data this afternoon. It is the Friday for Canada's employment change as well. Also, we've got employment change, part-time down here. We've got the participation rate. We should have the unemployment rate there as well, of course. And we have... that's the full rack. We've got average hourly wages as well for Canada. Now, I absolutely love this because, generally speaking, you get a really nice bit of volatility as a result in the UC, which is going to be our sort of primary trading instrument in the FX space. for this afternoon. So I really enjoy when Canada has the overlap with the US. Now, it does make a big difference, obviously, when the data is going to be good for one and bad for the other. This time around for Canada, employment change minus 15K, down from a 7.4K prior figure. We also have the where are you? The unemployment rate for the United States down here, and it's stable, 4.2%. So it does look like we may get that kind of volatility that we're looking for between the US and Canada, which means the UC is going to be a viable trading option for this afternoon, based entirely off of fundamentals. Of course, we haven't looked at the technicals yet. Apart from this, though, we have government, manufacturing, and non-farm payrolls. As that's why we're here. Payroll data today, 130K, down from a 177 previous figure. It is looking pretty soft. I think, as the introduction video that you guys saw a moment ago suggested, if we get a beat above maybe 175, 180, that's going to be pretty decent. Probably going to get quite a bullish reaction from the US dollar, the DXY. Probably going to get a bit of a mixed reaction from the stocks, I would say, in their current situation versus Fed inflation, monetary policy standards as well. At the moment, it's thrown a little bit into the mix. We also have to think about, of course, the elephant in the room, the orange elephant, Donald Trump, because he's going to be putting his own political spin on whatever numbers come out. He's going to take the win if it's a beat. He's going to start the blame game if it's a miss. And that's going to cause, in itself, some market volatility. So I think, unlike the NFP is probably leading up to maybe the last couple, things like Twitter and other social platforms, maybe not Twitter in specifically, but social platforms probably will have quite a high level of market impact. So it's worth having them open as well to see what the platforms are saying about it as well, because at this moment in time, investor sentiment is controlled by emotional investing. That's what I would say, especially when it comes to the Don. So that's where we're at. So we know kind of what we're trading in terms of the FX space. We are going to be focusing our attentions on the UC today. That's going to be our primary FX trading instrument. Technicals actually look pretty good at the moment as well. We do have a nice structural point getting broken through now. It is having a bit of an early market rally, maybe a little bit of front running going on here as well. We'll dig into that soon enough and have a closer look. In terms of the metal markets, we are, of course, going to be positioning ourselves in gold this afternoon, which is going to be superb. So we do want to be, positioned, basically lining ourselves up on that one as well. We are going to be doing our best to place pending orders at the market, so it takes some stress off of us. But at the same time, for those of you who have not potentially traded these sessions with us before, you of course have to consider the fact that you will be at the bay of slippage and other things. I'm always getting caught by slippage. It's a varying degree of it, but it will come. Spread variation will widely increase around big news events like the NFP, and this situation is going to be no different. But gold is going to be in there. In terms of the energy markets this afternoon, going to absolutely steer clear of them, actually. So nothing in either of the oil markets, natural gas as well, staying well clear of them. And then for our US indices, we are not going to stay clear at all. We are going to be looking at, hopefully, setting ourselves up in all three of them, at the very least two. So we'll start from the bottom of the list then. USD CAD, we're currently at 10 past 1, which means we've got 20 minutes to go until the main attraction of the day is on the horizon. So the USD CAD then, first and foremost. Yes, looking really, really good at the moment, actually. Really nice big breakout of structure here. Structural points at 136.85. We have got a little bit of potential front running, I would say, taking place in these markets at the moment. So we have to think rebound here, retest there, which means the point of liquidity is between the low and the high of these 2 points. Let me just outline these. Okay, so that area in there, and then this high in here. So those 2 points and the space between them is where the primary point of cash is in the market at this stage. So I'm going to draw a zone through there. Now, this is actually quite a wide point of liquidity. And as you can see, the ceiling of the sort of moves that we had here is a little bit lower than that zone. I'm not going to do anything about it here because at the end of the day, we've come up for a successful rebound here as well before going for the attempted breakout. So I think that's it. I think it's a pretty safe area to go for. So that's going to be my zone for the USD CAD. Now, in order to get a trade out in this one, you have to see a bit of a deeper break of structure. And why is that? Got any ideas why we'd be aiming for a bit of a deeper break of structure? So this area in here, for example, would be an ideal entry for a spike up to the previous highs, which is situated at about this level in here. And that is your available trading margin. So the reason, if there aren't any answers, that's fine. The reason that we would be waiting for a deeper break of structure this time around is because the market actually needs a BCR of this level in here. So what would happen in here prior to us taking the trade is the retest and the continuation, or so we'd like to hope. Now, I'm not going to necessarily wait for the retest today, just based on market volatility and what I may be expecting. The other thing to consider is the market analysis report. Okay, so the weekly report this week, it did indicate to us that the NFP was I believe it was a 9 out of 10. Now, that model is pretty damn good. Of course, it's open to mistakes, like any model in the world, but it's pretty damn good. If it says a 9 out of 10, I think it was. I know it had a pretty good impact. I know it had a pretty big impact in terms of broad market impact this week. If it is registering that high, we're probably going to get quite the breakout. So UC, for example, I'm going to be riding on the fact of that additional market volatility coming from the econ this afternoon. And I am going to be looking for around a 1 to 2.6, a very, very aggressive entry just above the breaker structure point in there to account for potential slippage. Now, a 1 to 2.6 in realized growth terms is probably going to net you more closer to a 1 to 2.2, maybe a 1 to 2.3. But that's still going to be really good. And that's the kind of thing that we're always aiming for when we're news trading, when we're news action trading. So that 1 to 2.6 there in the UC, that's a pending order, but I'm not going to punch the numbers in yet. I'm going to leave myself 5 minutes before the bell rings to punch the numbers in. So next up, we're going to go up to gold here. Now, gold at the moment is trading in a little bit of a conspicuous place, let's say. I don't like the fact that we're in the middle of two major margins. So, for example, we've got a nice big point of inflection up here. Arguably, it would be this one, but I don't want to be greedy. So that's the point of inflection that I would go for. The one down at the lows here is going to be about there. Now, that is the point of inflection, but I'm going to increase the size of the zone down here. And that's going to be the floor. I'm going to also increase the size of the zone up here. And that's going to be the ceiling. Now we've got a well-established floor and a well-established ceiling in this stage of price equilibrium. Essentially, the market traveling equal highs, equal lows, traveling sideways. On a daily time frame, you guys would recognize this is potentially an order fulfillment area, an order block is the term goes nowadays. And that's essentially where commercial interest is filling into the market, getting ready for either the next breakout long or the next breakout short, based on the positive or negative imbalance of price. That's the price action breaking free above or breaking free below. Now, at the moment, I'm actually only interested in the trading margin between the 2 points. I don't really care about long or short breakouts in this afternoon. It's Friday. I don't want to be stuck in anything before the weekend comes. Definitely not. So I'm actually only interested in the price bouncing like a ping pong ball between these points in time. So based on that, I'm then going to be setting up no pending orders in gold, but breaker structure points, so I am well prepared to take a market order if the market plays ball. And I'm going to come on to what I mean by that in a moment. So that's going to be my long breaker structure point. And up here is probably going to be the short. I actually quite like that one instead, to be honest. So yeah, I'm going to use that one there as my short breaker structure point. So order number one for a rejection from the low point and go long is going to be this trade idea in here. And we want a really, really super clear understanding of what we're doing. Okay, we really do, because we don't want to be faffing last minute. So it's important to map out your trades now and do the legwork now, so that when it comes time for the event to take place, we're not going to be faffing on numbers, risk rewards, positioning, all of that kind of stuff. We want to do that now in the risk profiling stage, so we have a clear and cut path to take once the action begins. Now for the short's going to be a little bit different. We're going to go for a short from there, targeting the floor with our stop loss at the sort of 50% point between these two areas. Now that's yielding a 1 to 2.5, probably going to net around a 1 to 2.1, 1 to 2.2, 0.35% return. That's another thing. Bear in mind, we are risking no more than 0.15% this afternoon, okay? We are not going in at the full 0.25% risk. 0.15 is your maximum of the account. So that's going to be a 1 to 3 in that one as well. So that's actually pretty tasty, that one. Get that nice and ironed out. So they're going to be the numbers for the long and the short. Now, the only way we're going to take that long in gold is if the market strikes the floor first. So we have to see gold come down, strike our alarm, then we can either look for the market order or the placement of a pending order if we have the time. So that's gold finished, and we'll move on. I am going to quickly just send you guys this gold inside here. I also want to quickly send you the USD CAD as well. I'm just wondering if there's a short availability on this USD CAD for the other side of it, you know. Because if we have that in there and we have a break of structure point situated in here, there could well be the opportunity for a short. It's one hell of a no man's land, but there could be. So I'm actually going to line up a potential short in there as well. Now this USD CAD, remember, okay, USD CAD can be pending orders. They can be punched in right now if you so wish. Remember, there's no, you don't need to follow. This is for guidance, educational, and market insight information. Informational is the term I was looking for. Informational purposes. So we're going to punch that in there as well for you guys, so you've got access to that one. Right, and then move on. So we're currently at 18 minutes past 1. I still need the time to punch in the numbers for my own. I can't do 3-4 tasks at once. So I'm going to get these out to you, and then we're going to focus on punching the numbers in, get those numbers set up in the MT5s, and then we're going to rock and roll for the event. So US 30 Dow Jones topped the list of the US indices this afternoon. Look, it looks like a bit of a state, to be fair, this US 30 Dow Jones at the moment. It doesn't look very good, but we're going to try and make the most of it. So we've got, you see these lows down here. Instantly, I think people would probably put their zone down there because they see that low. It's obviously been a point of interest for commercial buyers. The thing is, if we look back in time, this area is absolutely the point of inflection. We're coming up to this point once, coming up to it again. And then when we hit this point here, we get this immediate knee-jerk reaction. A knee-jerk reaction is a very, very prominent sign of commercial protection at that level, which means there is commercial interest, I guarantee you, between 42.32 and 42.36, okay? So then we drag that one across. Yes, it cuts off these recent lows, but I don't care. I'm talking about high probability setups here only. So then I'm going to think about the break of structure, right? And the structural break for a long is going to be here, which unfortunately the market's nowhere near at the moment. The break of structure for a short is going to be there. So if the market comes down to here and then rebounds and travels upwards, I'm then going to be taking my long once the price action breaks from this area and through this area. And for the short, it's the same thing. If the market breaks out long first, we come into this area, I will then be looking for the rejection, and the trade will be executed once we break through this area. Okay, so we've got potential pending order or market order number 1. Whoops. That's going to be there. Very nice yield on all of these positions so far. But it is going to be a spicy afternoon, guys, I tell you, because if we do get the market volatility, then we're probably going to have to do a fair few market orders, and that's going to be some spicy stuff. And so we've got the short, we've got the long. So that's the Dow Jones. And if we're going for a breakout of these levels, I mean, look, you can, if you want, go for a pending order immediately in the stocks, right? And the pending order is going to come down to this point in here, this point of interest. Look how many commercial lows we've got in here, right? So the break of structure for this short is going to be upon a break of structure below there. So if we get a breakout of that low, then we'll be looking to clear the margin from that low down to the big point of liquidity below, with our stop losses at the 50% point between the sort of current floor and the breaker structure. And that's yielding a 1 to 3.1. Again, you'll probably net yourself a 1 to 2.9. By the time the price actions reach this low, the spread variations would have tightened up. So you probably are going to get your sort of standardized good spreads back again. So you probably won't be affected too much by slippage. So that is a pending order. Okay, pending availability. Okay, so I'm going to send you that now. What time are we at? 22 minutes. We've got 8 minutes to go. Okay, so we're going to have to hurry things up here because I've still got to punch my numbers in. So that's the Dow Jones. Now looking at the NAS 100. Okay, so NAS 100 much better than the Dow Jones. Lots of availability here. So first of all, we have the low, which is going to be really nice for a TP. Really, really nice. And we've got a decent area for a breaker structure. So I'm going to iron that out first. We've got the 1, 2, 3. That's a three bottom rejection. So commercial interest point. If the market breaks down below here, we're going to go for a short instantaneously, pending order. Remember, it's got to be aggressive. You are going to be affected by the slippage if the market drops first. And you're going to go for a stop loss just above the point of liquidity there at around 21.62. And that's going to yield you around a 1 to 2.87. That's a pending order. Now, if the market breaks out long, on the other side of it, this is the no man's land. This is the space in which retail traders love to lose money. This area in here, we're waiting for a breakout of those highs. We're ultimately looking for the market to come back up to around maybe that level there, for example. And then you're looking at a long, which is not going to be as good a yielder. We're going to look for a target profit there. We're going to look for the entry again just above that point of interest. And the stop loss, of course, is going to be about here. That's going to yield you a 1 to 2.23. Ultimately, team, you're going to be looking at netting around a 1 to 1.8. So it's not going to be a huge trade, that one, but it is what the NAS 100 is yielding at the moment. So we're going to download that one, pop that into the room. Both of those pending availability. Remember, 0.15%. If you do not have the capacity to risk that little amount, then do not trade. This is, again, educational and informational purposes only. So that's what we're looking for there with the NAS 100. Now, finally, the Standard & Poor's. Again, not too bad with this one. I think it's definitely got the availability we want from it. It's got a nice ceiling in there. We've also got this point in here, which is the floor of the previous range, but also acting now as the ceiling to the current level of price. So that's really nice. And then, of course, we do down here have... Actually, we've got a TRF there. This would be, down here, the potential target profit, but we have a TRF. And the structural point for our access to this opportunity is going to be, come on, trading view, is going to be there. That's the breaker structure for the short, which is a no can do. Right, so no short availability on the S&P 500. We only have the long availability, and that's going to be a breaker structure in there, targeting the high and our stop loss just below that point of interest, and that's going to yield a 1 to 2.72. Now, as you will see, I've offered opportunity, I'm just going to post that in, on all three US indices. I would not recommend punching them all in. Make a choice, go with the two of the best ones. Okay, right, guys, I'm just going to hop over to my MT5 now. I've got to punch some numbers in here, so just give me a moment. Yeah, just give me a moment. I've got to get that done. So just to confirm, we've got 5 minutes to go. Okay, 42.89. Remember as well that all of your tickers will differ. We all use different tickers to match our broker feeds, so use the zones, use the visual element more than the numbers, because the likelihood is we won't be using the same feeds. Right, I've got 2 minutes, 30 seconds to go, guys. Just thinking that USD CAD long is it's looking a bit of a stretch now, actually, on reflection. Don't know if the market's going to have the steam in it today to get that done, but we'll see. We can definitely manage trades out. We can cut our trades early if necessary. Today's all about getting in and out of the market as quickly as possible. I'm hoping for the market volatility, but that's it. That's the numbers. Right, so Remember, got EC open as well at the same time at the moment. Bloody EC trade still going. We've had that in there for a while now. To be honest, it was an accidental trade. Yeah, it'll probably be taken out. To be honest, it's a break even now anyway. I might just. Do you know what? I'm gonna do the right thing because that's 0.25%. I'm taking that out. Yeah. Absolutely incredible gain on that one. Biggest gainer of the week. Right, let's get ready then, guys. We've got a minute to go. We've got 1 minute to go. NAS 100's taking care of itself. US 30 Dow Jones going to need some manpower. S&P 500's taking care of itself. And gold is also going to require some manpower. So we've got a bit of it's going to be a spicy afternoon here. Oh, it could be a non-impact event. We don't know. Hopefully it's not going to be a non-impact event though. Fingers crossed. All right. Remember that I'll get access to the data before, so. All right. 15 seconds. Let's get ready. Get ready to go, go, go. 2, 1. Stable average hourly earnings from Canada. 8.8k. Wow. Very, very surprise number on employment change for Canada. The non-farm payroll number 139, so very good forecast. Quite stable, to be honest. I won't really be expecting too much of volatility from the NFP number itself. Not too much of a surprise there. Canada's got a big surprise though. Very stable NFP numbers at the moment. I don't think we're going to see much from this. Yeah, that's nice. Beautiful. Yeah, I can see green in my box. Very, very nice. However, my my price is not so nice. Oh my god, man, where is that? Oh, 77 point entry price 77 point 79. Okay, so that's my realized S&P trade idea, which is a 1 to 1.56. So slippage absolutely kicked the earth out of me on that one. Unfortunately, it was quite a solid risk reward beforehand. That's fine. NAS 100 doing very well, but we're not out of the woods on these yet because they can correct and they can correct quickly. So we need to come back to that one. US 30 Dow Jones, I'm thinking about covering some of our longs in the stocks with a Dow Jones short. Okay, so get ready for that. I'm going to put my alarm back in the market there inside liquidity. On the way back down, I might consider taking a short in the Dow Jones to cover some of the longs that we've got going on. This NAS 100 being the main one at the end of the day. My price on the NAS 100 was actually 68.13. So that was yielding a 1 to 2 on the dot. So slippage for some reason, not so bad on that. The Standard & Poor's was terrible. I'm going to wait to see about the short in the Dow Jones to cover the NAS. Let's go down to gold. Non-impact event, waste of time. Let's go down to the UC. Okay, UC dropping big time. That's pending order, so I'm not going to do anything about that. That's just going to sit in the market. Back to the Dow Jones. Check that Dow. Dow's hovering at the moment. So you see really nice use of our understanding of liquidity and commercial interest. Really, really nice. Look at the S&P. Look at where it went. Look at where it went to. It didn't go anywhere further than exactly where I believed it would go. Okay, based on previous commercial interest points. From that area, you start seeing the contraction of the price because there's things happening behind the scene, commercial dynamics, money being taken off the table, longs being taken off, shorts entering the market. You also have to think about how many limit orders and pending orders were sat at 59.93 that were on the opposite side of the longs. They were the bear orders. Okay, so you've got a lot going on here behind the scenes, which is really, really important to understand in real time as it's happening. Same thing with the NAS 100, except for the NAS 100 at the moment is actually being least impacted by the NFP. That's not surprising given its tech stocks, making up tech stock companies. Dow Jones and the S&P are always more impacted by NFP figures. The US 30 Dow Jones here, we've come straight up into liquidity, same as the S&P. And now we're contracting, we're coming back down. Now I am a little bit concerned. Don't take that for be being worried about a losing trade. That's not what I'm saying here. I am a little bit concerned with the NAS 100 or the lack of the volatility that we're seeing in it at the moment. Okay, it could well hit TP, but it might not. Okay, we're definitely not out of the woods yet. That's why in real time I'm considering to cover the long with the NAS 100 with a short in the Dow Jones, because that way we get a nice cover on the other side. If the market drops down on the NAS 100, we hit a stop, we may see a target profit hit with the Dow Jones from its own contraction. And we're not getting anything wrong here. We're not cutting corners here, because at the end of the day, what we're here to do is to trade off of the back of commercial moves. And as you can see, commercial volatility enters the market in a sale format every time we come to this level. So we are following the process down to a T. So let's just see where we go here. We're up for the day so far though, with our S&P 500, so that's good. It's not a great deal, definitely not a great deal, but it's all right. Let me just give you the exact figure. Hang about. Wait, that's not right. 0. Times, what was it, 1.5856. 0.234 return. So we got a 0.23% return on the S&P in account percentage. What's the UC doing at the moment? 0.04 break even daily change. That's going to be a stop out. I can already see that. It's in the bloody red. So that's going to bring us close to break even. Remember, we're trading 0.15% opportunities here, guys. Yeah, it's gone. Yeah, it's just gone minus 0.15%. Let's label this out. S&P was 0.23%. NAS 100 still stationary. Yeah, it's still stationary. And now we're waiting for this Dow Jones long cover. What's gold doing? Yeah, complete non-impact event. Let's go revisit the news for a moment. Let's have a look at this. So we've got all the data out now. It's all come out. So we've got unemployment rate for the US at 4.2, as expected, very stable. Unemployment rate for Canada at 7%. It's a 0.1% increase over the previous figure, but to be honest with you, that won't be impacting the market too much. We've got the participation rate from Canada and the US 65.3, 62.4 respectively, and that's completely stable. And the non-farm payroll itself was 139k. That's under a 147k previous figure, but above a 130k forecast. Again, you couldn't find anything more stable, to be honest, with a non-farm number at the moment. So, yeah, I'm surprised we got the spike that we did even in the stocks. It's very, 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 very stable numbers. The employment change data 8.86k. That's a big number. Yeah, a big change in the number from the analyst expectations. 7.4k previous. I mean, 8.8 would probably make sense, right? Yeah, I don't know where the hell they got minus 15k from. It's crazy. Average hour, average weekly earnings, average hourly wages, average hourly earnings, annual data 3.9%, up from a 3.7 forecast, but remains stable at 3.9%. We're not seeing anything out of the ordinary here whatsoever, team. Okay, nothing at all out of the ordinary. This is stability, economic stability at the moment. Now, of course, we review these numbers, these figures month to month. We're not looking at anything sort of, mega here, but yeah, it's very, very stable. And I'm always saying that stability is often, even though it's good, it's good in the grand scheme of things, it's often very boring. It makes boring markets. We like instability and price variation or data variation because it generates volatility. So when we get stability, things are snail pace, and this is not going anywhere. It's not going anywhere, guys. We're stuck. So I'm not going to do anything. I'm not going to do anything about that now. So I'm just going to let the damn thing go. I've got my alarm in for the Dow Jones. We all know if we get that alarm triggered, I think it's going to be a good opportunity to go short and cover the long that we're stuck in the NAS 100. The USD CAD, we did take a loss on that one. Some nasty shakeout. That's what it led to. That's fine. And we got that small win on the S&P. I mean, everyone's slippage is going to be different. Slippage absolutely crushed me on that trade idea. I think, I can't remember what we were at before. Maybe a 1 to 2.6 or something, or a 1 to 2.8 on that one. So we're talking about literally one reward. Ultimately off the trade on that one, so a little bit disappointing there, but yeah, it is what it is, part of the process. So we're now at 20 to 2. I don't know what to do about this afternoon's US trading session per se. I really want to get that NAS in the basket beforehand, of course. We've got 50 minutes to go until the bell rings this afternoon. I don't really want to be exposed in any US assets before the bell rings for the US. As you can imagine, the bell rings for the US. We get bin in the morning, we get short in the afternoon. The market cycles there does tend to go that way. So yeah. Hopefully we get done with this one. Scotty D, would you short at the opens from these highs or look for a breakout long? Look, based on the NFP data today, from a fundamental point of view, there's no reason to think, and there's going to be no reason to think that increased pressure on the Fed remains to keep rates higher for longer. We're looking at very stable employment in the US. We've had a couple of outliers, but generally speaking, the employment situation in the US, based on the data, has been relatively stable. So there isn't any reason, and it's not been adding a great number of jobs, right? So which means there's not a significant level of people in employment making loads of money, and so on and so forth. I mean, look at the average. Where are we? The average hourly earnings annual data, 3.9, is stable. If you look at the previous figures, this has been at 3.9 to 4% for a long time, mate, a long time. So, and we've been looking at rate reductions throughout the course of this process. So based on a monetary policy perspective, there's not the pressure on the Fed at the moment to keep rates higher for longer. That can only be good news for the stock markets. Lower inflation, lower interest rates, cheaper to invest in more riskier assets. You know the score, like a textbook, right? But I think the lack of any major change. It's not like we've had a big miss or a big beat in the numbers. The lack of that sort of the lack of the market impact from the data this afternoon would probably lead me to believe, let's say, for example, we get this same zone, right? We just bring that zone above there. We increase the width of it, and that then becomes the zone. So now what this zone turns into is the pinnacle of a recent inflection point, which is enormous in size from an intraday perspective. Let's just measure this out, right? From that high to that low, we're looking at a 3.6% sell-off in the US tech stocks from achieving the 2180 liquidity point. Now, if we look at this one, we've got a fake out, so that doesn't really count for much in my personal view. This one is the major one, and that's where we're approaching. So in response to the question, would you short at the open from the highs, i.e. if this was the highs that we're referring to, then yes, I would be much more favoring shorts from these highs than I would longs. The same goes for the US 30 Dow Jones. We've got this really nice, let me just get rid of my my colorful drawings here. If we say that, you know, this area in here, for example, is just part of a wider, broader point of liquidity in the Dow Jones, then yes, you're absolutely right. Today is not going to be the day for me on a Friday afternoon to go looking for long breakouts in the US indices. I'd be looking to short back from these highs. Now, if that is the point of liquidity there, then you can actually look at this and say that actually I could probably look at a breaker structure point being way more higher up with a nicer risk reward yield, right? And then put that alarm you can move up to there, and this becomes a really nice profitable opportunity. So that looks pretty good as well, shorting from the highs. The Standard & Poor's this afternoon, again, you're exactly the same situation. If you look left, we have a 4% sell-off that took place 29th of May. You can see that all the banks and the funds are up here at the moment, positioning themselves up at the highs. The market's actually continuing to rally. I'm still waiting for my NAS 100. Come on, you can do it. But the S&P at the moment, trading up at these levels, again, this is a really typical and very nice place to consider shorts in the market. So that's what we're going to be looking at. That's what we'll do. That's what we're going to plan for, basically, for this afternoon. And then your breaker structure points from these areas on, you're going to be looking for, obviously, the structural points throughout. You know, areas like this, for example, make quite a nice structural breakout point in the S&P. So then once we come up here, you'll be looking to short below there down to here. And that'll be your trading margin for this afternoon, you know, between this area. Whoops. Come on. There we go. Between that area there. Targeting here. A little bit lower than that. And a stop loss about there for a 1 to 2.3. Now this afternoon, you will be risking 0.25%, of course. The dust is already settled from the NFP, and frankly, it's not exactly been too much of a major event, so there's not going to be a lot of dust to settle, frankly. So you're back at 0.25% for this afternoon's trading opportunities, and yeah, you take it from there. So that's the Dow Jones short setup. That's the S&P 500 short setup, and the NAS 100. Yeah, we're gonna have to wait and see, guys. It would be a shame. It would be a real shame. I mean, we're only a stone's throw away from the target up there, but you know what it's like. Now, if we go back in time here, we've got a nice point of structure that runs right the way through just below the price line here. And what that means is that the price action is actually just broken free of the liquidity here. And now we're coming back for a retest. Now, the retest will tell you a lot, because if the market breaks down below this point of structure, chances are it's probably going to go to the red. Okay, so you can put an alarm in nicely below that structural point there. Give it a little bit of room to breathe. If it triggers the alarm, take a view on it, maybe decide to get out. Call it a day. You know, and you get out with 40% of the profit instead of 100. But it won't be a loss. Okay. I think that's about it, team. I'm not going to be, I'm not doing any work on the FX space, metals or energies this afternoon. Obviously, it's a Friday afternoon. We only want to be focusing on our US indices to close out the week. I'm going to be, as Scotty's already said, I am going to be focusing my attentions on shorting the assets this afternoon, back from the points of liquidity above, the cash-rich areas that we've outlined over the course of the last sort of 5-10 minutes of the session. We are now at 10 to 2. So been on for almost an hour, and I think it was a bit of an anticlimax, to be honest. the data was pretty stable. Yeah, there wasn't too much broad market impact, but we did manage to come out with a profit, just a small one. We'll have a look at how the NAS 100 goes this afternoon. That might come out with a little bit more or whatever. And yeah, we'll see what this US Open brings this afternoon to finish off a turbulent week. Now, if you have any questions, guys, now's the time. You got any questions at all? Yeah, no problem at all, mate. That's absolutely fine. No? 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 Okay. All right. All right then, team. Well, I'll wrap things up there then. I hope you've enjoyed this session this afternoon. I hope it has been informative at the very least. And take care of yourselves. Have a fantastic weekend. I'm absolutely buzzing to catch up with you guys also on Monday, where we do it all again. I will be releasing the end of week market report as well this afternoon, which just covers fund performance, how we did, wins, losses, the various ratios and stuff like that. It's always good to have a really good review of your trading performance. And for me, I like doing it completely open book. So if you do want to catch up with that one, it will be in the performance review section of the trading community, and I will send links into the general chat. So have a fantastic day. Have a fantastic day, guys. Good luck out there in the US Open this afternoon, and I will see you soon enough. Take care. See you then. Bye-bye.